You're watching the Money and Wealth Show. I'm Sterling Fox, and our special guest this week is Garth Turner, not the Olympics' biggest fan in the whole wide world. We've had two previous Olympic experiences in Canada, Montreal back in the 70s, Calgary in the 80s. Montreal was a financial disaster.
Oh, absolutely.
It's 30 to 35 years
That's
it took
right.
us to pay that tab.
Yep.
Calgary broke even, actually made a few bucks, as did Salt Lake in '02. I'm not in the least bit convinced that Vancouver is going to make a profit. I'd be deliriously happy if they broke even. What are your expectations?
Well, I expect that it's going to take a while before we truly know the cost. I mean, hey, what does it cost to rent a helicopter to bucket snow off a mountain? I mean, this is, you know, none of this stuff has even been costed.
Right.
It was just done. And $1 billion for security, and that's before anything was built. And then you've got these waterfront condos that have yet to be sold and go on the market to pay back all of that.
The ones the city of Vancouver had to actually bail out?
Exactly. And then you had special legislation passed to allow more debt to be taken on by the city of Vancouver, plus the province of British Columbia. So I'm very concerned that, you know, British Columbians will not really know the extent of this for a while. And by that time, they're hoping everyone just is basking in the glow.
Well, the glow feels awfully darn good. Let's hope that when the numbers finally get crunched, it doesn't take us out at the knees. We'll have more with Garth Turner on this week's edition of the Money and Wealth Show in a moment.
It's all about money at the HowStreet.com Money Expo 2010. They'll be talking money, making money, saving money, and protecting assets. See Garth Turner, Michael Levy, Ross Clark, and David Morgan. Plus, visit with industry exhibitors. The HowStreet.com Money Expo, Kelowna, March 13th. To attend free, pre-register now at HowStreet.com. That's HOWE Street.com. It's all about money at the HowStreet.com Money Expo 2010.
Welcome back to the Money and Wealth Show here on Check TV. I'm Sterling Fox with Garth Turner. And Garth, some interesting numbers from 2009. We saw record levels of American investment in the Canadian marketplace. Two reasons given for the attraction to Canada as a place to invest. One, our banks, and two, resources. These are the barbells, as some call them, that have caused unbelievable amounts of U.S. dollars to flow northward. They're not buying real estate, are they?
No, they're not. And actually, Canadian real estate by American standards is absurdly priced. The average U.S. home is $178,000. The average Canadian home now is $350,000,
Right.
so it's twice the price. So they're not interested in that. But yeah, they are. Our banks have been pretty good. And actually, those are two of the areas that I recommend to people to invest in, are Canadian financials and commodities resource sector. And I think that both of those are very good. I would combine that with healthcare because of the aging population and a few other things. But I think those are very solid reasons to invest in Canada. And the Yanks aren't dumb. They know that.
Well, exactly. And we know that the banks are well known world over as being a solid institution in which to invest. But the resource sector is attracting equal amounts of record billions of dollars. What is it about our resource sector that's so attractive to the Americans?
Well, you know, around the world, Sterling, there are trillions of dollars floating around right now looking for a home. Equity markets look pretty good. Commodities look pretty good. And we have a lot of commodities. So we're naturally one of the places in the world that I think is, you know, attracting that kind of attention. And it will continue to do so. And I think we as investors should be looking at that as well.
And though many Canadians seem to think we are, geopolitically speaking, we're not a rat's nest of local politics. It's a pretty safe environment to invest your loot, isn't it?
Well, relatively speaking, absolutely. Yep, it is.
On the specifics, however, we could go on for another half hour.
We could. There are some dangers to investors, but another show.
The new book is Money Road. Garth Turner is the author. He'll be back in British Columbia in Kelowna for the Money Expo show on Saturday, March 13th. Garth, thanks for joining us. Good to see you again.
Pleasure as always. Thank you so much, Sterling.
And we'll be back with more on the Money and Wealth show after this.
Tax Tips with David Ingram.
Why buy an RRSP? Well, you can do better, you know. Let's pretend you're going to buy an RRSP XYZ moose pastures, and you're going to put $5,000 a year into it for the next 10 years. At the end of 10 years, you put 5 times 10, that's $50,000 in. You got a tax refund deduction of $50,000. Whatever the money's gone up to, you're going to have to pay tax on. If instead of doing that, you had borrowed $100,000 from the Bank of Montreal, paid 5% interest a year, your interest deduction would be $5,000 a year, which is exactly the same as the $5,000 a year that you put into the RRSP. However, the leverage, if the stock that you bought did any good, would have done twice as well, because you'd have $100,000 working for you the first year, and $100,000 working for you the second year, and $100,000 working for you the third year, and you would have more than twice as much money at the end of 10 years after tax than you would if you bought the RRSP. That's a tax tip.
And that's our program for this week. Our thanks to David Ingram and to our special guest, Garth Turner. And thank you for joining us. If you have some thoughts about the program that you'd like to share with us, send them along to comments@themoneyandwealthshow.com. I'm Sterling Fox. See you next time.
Comments made on the preceding paid commercial program are an expression of opinion only and should not be construed in any manner whatsoever as recommendations to buy or sell any financial instrument at any time.